Good evening, everybody. All right, we're probably going to spend a little bit less time on stocks. I got still plenty of them, but a little bit more on what you do in these market conditions. So today, as you saw, they still sold off, and at one point, I think at 3:45, 15 minutes before the close, the market was down 560 points. And then in the next 15 minutes, it came up 300 points, but still a bearish signal or bearish candle. However, as I had pointed out in the afternoon newsletter, there are a few things that give us the advantage of knowing when a reversal is about ready to occur based upon knowing what happens with our indicators and human nature. So, the first thing, obviously, is knowing that's not what I want. How does that happen? Hold on, I got it. This is just a 5-count. First thing is knowing that we're in the oversold area. The second thing would be, look how far away we are starting to move away from the moving average, or from the T-line. So the third thing is, if this is wave 1, wave 3 is now getting to be about that same magnitude. And then the fourth thing is, trying to figure out what it was. You got a bearish engulfing signal in the oversold condition. And so, usually, obviously, you want to see a bearish engulfing signal in the overbought condition, or a bullish engulfing signal in the oversold condition. Oh, I don't have the 34 over here. So let's, while we're here, add study, add moving average, that up. 34. Display it with a color of gray. Hit AUK. Add. There we go. All right. Got the 34 in there. The fourth thing is just kind of four things, and these are all, Gail, based upon what we know about human nature and how candlestick charts work. So, 1, just the fact we're in the oversold area. 2, look how far away we're starting to move again away from the moving average. 3, if this is a bearish J-hook, we've got a wave 1, wave 2, wave 3 now getting to be about the same magnitude as wave 1. And then 4, is seeing a bearish engulfing signal in the oversold condition, which usually indicates that's the last gas for selling. So we definitely want to see what how they open this up tomorrow. Now, so what are the different situations? 1, if they gap it way down, start watching for the bulls to step in. 2, if they open it lower and take it down hard, moving that much further away from the T-line, you start watching for a reversal. Or 3, if they open it positive and start trading positive, telling you they're doing a second bullish harami down here in the oversold area. So just the fact that they're doing one bullish Harami shows you that probably the selling is slowing down. In this case, it didn't stop. You see a second one. That's now getting to the point where you're again seeing the bullish Harami telling you that the selling has stopped. Now notice what happened today in the last 20 minutes or so. They took it all the way down here and brought it way back up here. Now that, a lot of people say, well, that's a good reversal on the 10 minutes. Should we look for something positive tomorrow? The answer is no, because what is this telling you right here? That at the last 20 minutes of the trading day, investor sentiment was changing. What does that tell you about the investor sentiment that might be occurring in, 9 hours, 12 hours, tomorrow? Has absolutely nothing to do with what was going on right here. Yeah, so it doesn't matter, Joel, that the last signal today was a bullish signal. This is telling you what the investor sentiment was at the end of the day. Tomorrow, we might have a completely different set of investor sentiment. Okay, same scenario on the NASDAQ. Now, the NASDAQ is getting beat up. I'm going to skip right to what I call the biggies. These are the stocks that are getting beat up bad. Amazon. Now, I say these are the stocks. These are the stocks that have been in the forefront now for the last X number of years. But as you can see, Amazon has pretty much lost 20% of its value since it reached a peak up here. Now that's pretty hefty. I'm going to make it smaller just to see what it looks like. Still can't tell what it looks like. Got to make this even smaller. So what are all the different things that we can put on here? Got to make it even smaller yet. Trying to find the last bottom. I don't know which one to even use. So even if we use this one right here, we go to a Fibonacci retracement. Well, not looking at it any more specifically than what we did, it looks like they just touched the 50% retracement on the Fibonacci. Now, does that mean actually 26%, Jay? Yeah, that's probably right. If they opened this positive and took it positive tomorrow, but you could say that it was bouncing off the 50% retracement. So it's not that we're targeting that area. We're just looking to see if these areas have any relevance as far as where the price moved to. So if we saw a bullish Harami tomorrow, after just touching the 50% retracement, you could start making some logical conclusions that that's pretty much where they started to bounce. Okay, the other one's Apple. Apple's been junky. Wouldn't have been trading it, so it wouldn't have been a concern today. But you could see that this one was going nowhere, and you couldn't even project which way it was going. It was up, down, up, down, up, down, sideways. So that one shouldn't have hurt anybody. Now, NVIDIA is a prime example of why you stay short as long as it stays below the T line. Now, as you saw, when it sold off hard, it was off 19 points at one point today, and then finished up only off 12.5. And Netflix was somewhat the same scenario. Now, what is the purpose of looking at some of these that are really getting slammed hard? Because at some point, the buyers are going to step in. And so there's always the rhetorical question, where do you grab for the fallen knife? Well, if we know what to be looking for, if they gap this down, you start looking for the buying. When I say you start looking for the buying, you go to your 10-minute chart and see what happens. If they open up positive, see what your 10-minute chart is telling you. So if we think we're catching a bottom, because again, notice how far away we've now moved away from the T-line. And what's our very simple rule? That they're usually going to come back up and test the T-line. So this has given us an opportunity to say, all right, how is it open? What's it doing? At least now I have some mental preparedness. Now, if it opens lower and keeps drifting lower, not telling you anything. However, if it opens lower and starts drifting lower, not really telling you anything, if the magnitude of the selling gets pretty extensive, that's when you start stepping in. If it opens lower and comes down and turns around here and comes back up through the open, that's telling you that might be the point where the bulls are stepping in. So because of the visual information that we can see in the candlestick charts, we can make some strategies for catching some of these as they hit, if they hit rock bottom, to start making some very high probability, high profitable trades. Now Tesla, on the other hand, you can see what the market's doing and see what Tesla was doing ever since this big morning star signal. And this always relates back to one of the basics of candlesticks, is that the bigger the reversal signal, the more compelling there's been a change of investor sentiment. Now, you're not quite in the overbought area, but you've done a doji. So if I was long, I'd simply have a safety stop below the low of that doji. Because we know what the percentages are, that if they open it lower, they're probably selling it off, and definitely if they open it or trade it back below the low of the doji, they're definitely selling it off. Now, Twitter is one that was getting some good action the other day from kind of a kicker type signal, and it was acting well, but then sold off. But I'd still be not too hesitant about buying this one based upon positive trading. It's big enough where everybody can see it. So I'd still be looking for positive trading on this because of this this kicker type signal. Right off wave 3 extension, okay? And a lot of people have been always asking about AMD. Look where AMD closed today. Right smack dab on the 200-day moving average. So in the oversold area, where would be a logical place to be buying? They did some sort of signal and or came up through today's open. So that would tell us at least we got the potential of a bounce, which in this case would be about a 15% upside. All right, the other one's Nugget backed off because gold was a little bit gold got a little bit soggy today, but see after hours that gold's trading back up. So what's that kind of telling us? That this 45 degree is still in progress. So that might be an implication that Nugget might have just come back doing the normal, broke through the resistance, came back and tested it. If they open this positive, now there's a good probability your next target would be up to the 200-day moving average. All right. On 6/18, make this small. Oh, so right down in this area. Yep, pretty close. Okay, and Labu. Labu was soggy today. Once again, wave 1, wave 2, almost looks like wave 3 could be still down into this area to equate to wave 1 on Labu. All right, so the ones we were looking at today. Now, this is kind of the rhetorical where everybody says, well, what if it opens positive and then starts backing off right away? Well, that's exactly what you want to be looking for. If it opened positive, didn't really move and started backing off, my first inclination is I don't do anything until I see it back off and then come back up through the open. Because if it's backing off, what do we got going on? Profit taking. If it's backing off and then comes back up through the open, what's that tell you? Pretty much that the profit taking is over and it's a good time to be buying based upon the buy signal. Marshall, yeah, right now it doesn't really matter what's going on in the stocks. It won't matter until approximately 5, 7, 10 minutes before the open, because that's where all the big money is putting in their orders. For all we know right now, on something like Amazon trading lower, that if somebody has a margin call, they may still be trying to get out on 4,000 shares or 200 shares after hours. It's the big money that you want to see, which is usually indicated right there, very close to the open. Okay. We also recommended TSM, TMST. Same scenario, opened and backed off. Now, that backing off, I forget how long it took the Dow. We can find out. 1, 2, 3, 4, 45 minutes or so before it started backing off. When we use the monthly chart for long-term holds, do we still wait until end of month, just like we wait until end of day on daily? No. You still want to see what your daily and your weekly chart is telling you. It's just like if you're trading off your 10-minute chart, you want to see what your 5-minute and your 1-minute is telling you. So if your daily and your weekly are telling you that you're starting to see shooting stars and bearish engulfing signals, you don't want to wait a month to see what's happening. You probably want to you kind of extrapolate, obviously, that your monthly chart is going to start looking a little bit weaker. So you're using your monthly chart for your long-term decision making, and you can use your daily and weekly. I'm going to use Amazon just as an example because this is what we're going to be going into here in the next couple of weeks. That if I thought things were rolling over and I'm still thinking I want to hold Amazon long term, but for the first time in a while, the new highs are now not a new high and they're selling it off. That's a good indication there might be a sell-off. But I don't want to sell the stock because I'm holding it long term, but I might sell some calls up here, do a covered call trade. So that's kind of the strategy you want to use with the different option strategies that we're going to be going through. ResMed, kind of the same scenario. Now, if you bought on positive trading, notice what this one didn't do compared to, which one was it? Glue. Notice where glue closed. More than halfway down this candle, which was telling us there was bullish sentiment going up to the 50. So the fact that they closed more than halfway down that candle showed you that there's some good weakness in there. Whereas ResMed, they didn't close halfway down this candle, which would have been below the 200. So that's kind of saying, all right, you still got the bullish signal here, the strong best friend signal, but you don't have a sell signal at all. You continue to stay with it. Well, let me see. Looking at Amazon on the daily, the weekly. Yes, your weekly. If you were holding this long term, meaning there's your bullish, your monthly. Then you had a doji up here. That doji would have said, all right, what's my weekly telling me? The weekly's closing below the T line. And if I even went back a little bit more refined, my daily is closing below the T line, which if you extrapolate that to your monthly, that means your monthly, after a hanging man in the overbought condition, well away from the T line, just like this could be your 1 minute chart, your 10-minute chart, your daily or monthly. But when you started seeing this sell off and you saw that your weekly and your daily were selling off, yeah, that's kind of telling you hanging man doji that far away from the T line in the overbought condition, where am I likely to move back to? Probably the T line. About what puts it at 1950? You could have. Let me get back to right about in here. Now you could have bought puts here. Let's say you sold the 2070s. I'm just picking out here. Well, they never got back up, so you were all right. Well, they started back up again. And I'm trying to, let's see. They would have expired somewhere right about in here, so you're all right. Well, then it turns back up again. And here's one thing that you should always kind of keep in your mental arsenal. If you're in an uptrend, and this was a good uptrend. I mean, they were using, you can see how Amazon pulled back to the 50 and had kind of a piercing signal, started back up. What was your uptrend telling you? Pretty much every time it hit a high and pulled back, it hit a new high. Pulled back, hit a new high. Pulled back, hit a new high. Pulled back, whoops, didn't quite get to a new high there, but it supported on the 50. Still moving up. Next sell signal didn't go to a new high. That's just on a general technical analysis basis. Tells you, oops, they've lost steam here. And we can see with more clarity on the candlestick charts that we had selling and closed back below the T line, and we failed to get up to a new high. That's an immediate alert to say, all right, we've lost energy. It's either time to get out or be writing calls. But the uptrend has kind of failed. Now we're going to see, is it going to support here in the 50? And obviously, it has done what it's done. So if you're in an uptrend, new high, pull back, new high, pull back, no, new high, no, new high, get ready for some selling. Because just logically, it says everybody that's seeing it's been going to a new high, and so that they're starting to sell before they got to a new high. That means they've kind of lost interest or kind of losing their enthusiasm. And that's where the selling starts coming in. And fortunately for us, we can see with much more clarity what happened up here and that they closed back below the T line. Okay, and another one that was acting well was NIHD, and it pulled back, but what didn't it do? Didn't close below the T line, and didn't close below the halfway point of this candle that was kind of a little Morningstar signal. So what is our criteria for holding this? You see a fry pan bottom. You're coming up out the other side. All you have to do is stay long as it doesn't close below the T line. So even though it pulled back, which was nothing detrimental as far as the selling of this position, because the market was selling off, it didn't breach the pattern, the fry pan bottom. It didn't close more than halfway down this candle that told you you had a bullish candle or a bullish signal, and it didn't close below the T line. That's just kind of a few pieces of evidence to say stay long as long as it stays above the T line. Now, this is why you want to know your signals and patterns. You don't have to be an expert at each one. But if you're short, you're short, you're short, you're short, and then you see a left-right combo and it closes above the T line, remember, we usually want to see bullish confirmation. You don't need it with a left-right combo. That is such a strong signal that it's telling you close out the position immediately. Because the probabilities are extremely strong that not only are you going to be in an uptrend, but a strong uptrend. So anytime you see that left-right combo, which is a doji followed by a bullish engulfing signal, that's telling you the uptrend is going to be starting pretty soon. As far as the shorts, notice your bearish belt hole on Winnebago. And what's the one thing on Winnebago that hasn't occurred ever since the bearish belt hole? They've never been able to close it back up above the T line. What happens when they hit the T line? They take it right back down. Now, I've often stressed this observation when I say, notice what happens when it hits the T line. What do I want to say? The relevancy of that statement is that 99.99999% of all people out there do not have the T line on their chart, which basically is saying that this has hit a natural resistance level. So when you put it on your chart, you can see it. That's that much more compelling that the bulls aren't there. That could be true. Yeah, true. That could be, yes. Paul, that could be right. On Amazon. But it doesn't matter. Because I've had so many people ask in the past, XYZ just had excellent earnings. Why isn't it supposed to be going up? Well, somebody's evaluating it much differently than the obvious. So this is why candlestick analysis is that much more insightful, because as we saw in Netflix, they had great earnings and they popped way up here. Then what's happened after that? This analysis or this result apparently did not make any difference. They were selling. You don't have to know why they're buying or selling. When we're analyzing candlestick charts, we're just analyzing what they're doing, not why they're doing it. Yes. The difference between a belt hold and a message is that a belt hold basically comes right back down into the trading range. Notice where the low was today. Right down here. Now, if this opens lower tomorrow, What's it telling you about your trend? Your trend's continuing. Now, if it had closed up here, that becomes a message. And what's the definition of a message? That even if it's a bearish candle, the message was somebody was trying to get into it with great speed or great urgency. And that's why you start watching for dang, I'm trying to think of which one it was. I know we'll come across it. Well, I don't see it. There was one, glue. There's your message. Let's say closed it way up here and then took it positive. Now, if this had closed down here on this day, that would have been your bearish belt hold. So that's the difference between a message and a bearish belt hold. So, who was it that was in here today that the picks were confusing? Danny, are you in here? I don't see Danny. Anyways, yes, Bruce, I would have on glue, because what was the logic of buying this? That we had kind of a message, bullish confirmation, but if the bears had enough strength to bring it back down through this level, what did that tell us about the 50 and what did it tell us about the strength of this uptrend? Not very good. Get back out. Now, percentage-wise, that might be a hefty percent loss. But probability-wise is for every time you get into a situation where it's giving you a strong bullish signal, you might have one that gives you a bad percentage loss, but you have another 8 or 9 that give you the positive trading. Yes, get out with a loss. That was an indication there was too much selling. That they could bring it all the way back down through the open of that candle. Okay, and then Diana, you had puts on this one. This one had kind of an indication. All right, so the indication was it's kind of a wedge setup, and it broke the bottom of this wedge. That told you which way it was probably heading. Same thing on TEL. Oh, you can see what the wedge looked like. And then they broke it in this direction. Now, I was thinking more they were going to take it to the upside because the stochastics were in the lower range, but it doesn't matter. When they break a wedge, they're telling you which way they're planning. Which way they're planning to take it. The green line, this little green line, yes, is the 3T line, a 3 exponential moving average. The black line is the T line. If hang on to glue loss would be greater than just getting out. Well, for 2 reasons to get out. One, because the whole purpose of buying glue in the first place was that it was confirming this signal, which was your message confirming. But when it came back down through this level, what's it telling you? That the buyers aren't there. So the rhetorical question you always have to ask yourself, not rhetorical, the actual question you have to ask yourself is this a good bullish pattern that I should stay in? If the answer is, well, it could open up higher and go back up, but we don't know whether it's going to open higher and go back up. We don't know whether it's going to go open and stay flat. We don't know if it's going to open and go down. The whole point of using candlestick analysis is because every time we see something that we can identify the bulls are in control, that's what we want to be in. If we get to a point where we don't know whether the bulls or the bears are in control, now you're just kind of shooting from the hip. I'm short KBA. Tried to follow up, Brian. Hold on to the individual ones until I get through. I don't have a whole heck of a lot tonight because there's not a whole heck of a lot to go after now. And I'll do the individual ones at the end. Here's one that looks good. Let's see how far back this was. So here's nothing. Nothing. Then something new. Then the profit taking. Well, how do you know when the profit taking's over? Look at our little left-right combo. Opened positive today and did a doji. So now what's our next analysis? Well, we got the doji rule. First of all, we can kind of try to assume that if they did a left-right combo closing above the T-line and today they did a doji still staying above the T-line, now we've got a couple things to look for. A positive open tomorrow, doji rule. It's going to trade positive. And if it trades positive, probably got to do a doji sandwich the same magnitude as this. And if it does the same magnitude as this, if you kind of draw your trend channel down through there, if it opens positive, what's it tell us about this little resistance level? It's not there. So why would you want to go after something that looks so volatile? Because we can read the candlestick signals just as plain on the volatile ones as the dull ones. And then if it does move, what's the magnitude of your move? You could come all the way back up here, possibly doing a J-hook pattern testing this level, giving you 4 points on a $6 stock. I can figure that out, about 66% or better. Is this a wedge? Nah, not really. A wedge, this is more of a J-hook pattern setup. All right, so that is one to play. Now, what is our strongest signal out there? If you took the quantitative top-ranked session a couple weekends ago, we know our top-ranked ones are the best friend. So there's your doji gap up from KEM. Definitely want to be a buyer of this one on positive trading tomorrow. That one is... And this one, now that's not a kicker, that's your best friend. Now remember, a kicker would be a big dark candle and they gap it up and do a big green candle. When they do a doji and a gap up, that's your best friend. That's the doji followed by a gap up. Oh, you were... Oh, you were answering the question of the strongest signal. All right. Yes, the strongest individual signal is the kicker signal. The strongest combination signal is your best friend, the doji gap up. I didn't catch on. All right, so HRL. This pattern looks familiar. There's your classic. Right pan bottom, J-hook pattern. How's the new wave setting up? Just like you saw in 4, right pan bottom, J-hook. or even Fred's. Right hand bottom. Watching to see if it's going to do a J hook. So, again, the advantage of knowing what to look for in these patterns give you two advantages. One, the prospect of the rate of return is going to be that much greater, number one. And number two, the prospect of the signal pattern working is that much greater because that pattern, as you could see in all of these, market down big today. Ford was up. Market down big today. Fred's was up. Market down big today. HOR was up. HRL was up. Again, all doing a classic type pattern. So this isn't coincidence or lucky hits. Because if you recognize the pattern, you've got that much more probability that it's not only going to work, but it's going to high probability of working, but a high probability of a bigger profit. So there's your best friend, VCRA. Kind of doji gap up through the resistance level. What do you expect off of here? A 45 degree. Why? Because you have a very strong move in what's our top ranked signal pattern? Best friend. What else about this signal or pattern? The bigger the signal, the more compelling has been a change of investor sentiment. And this is, there's kind of almost your kicker signal. It would be close enough to be considered a kicker signal. Opens here, closes here, gaps up and goes the opposite direction. And what type of pattern is it doing? Wave 1, wave 2, going into wave 3. Now, another transportation. This one's been working, except they pulled back pretty good today. And here's one where, notice how this one got started. With a bullish flutter kicker signal that broke out through the 50. And notice the magnitude of this bullish flutter kicker signal. Now everybody knows what a bullish flutter kicker signal is. There's your dark candle. They gap it up the next day and do a doji. Not real intriguing, except for the fact that we know what should happen after a doji. If it opens positive, it's more than likely going to trade positive. If it trades positive, and you took out this little flutter, you basically have a kicker signal. Now you have a doji. Not anywhere near the overbought area. So the same scenario. If it opens positive, now what do you got the possibility of? A doji sandwich. Do you adjust trade size at all when market's selling hard or trading upside? No. My criteria is that if my portfolio has 10 positions in it, and they're all, let's say, $25,000 positions, if the market's going up, I don't add to a $25,000 position if my market, adjustment is that if I think the market's going up strong, I may have just reduced the number of short positions, and now I might be 8 or 9 long positions, all 25,000 apiece, but the balance of my portfolio is to the long side. Now, obviously, on the downside, if I've got 10 positions, I may have been in 8 shorts all the way down, because on any given market, with the simplicity of candlestick scanning, we're always going to find some bullish charts in a downtrend. We're always going to find some various charts in an uptrend. So why not have 10 long positions in an uptrend and 10 short positions in a downtrend? You never know when the market might turn on you. It's always good to have maybe, say, 8 long positions in an uptrend and 2 shorts, just in case you get a soggy couple of days. The shorts will kind of offset any of the selling in the longs. And it's not unusual that even in enough market that the shorts still work even though the market's heading up. Does open positive mean the open price at 10 minutes? No. If I was going to say if I'm going to stay short on this, provided it opens lower, it might open right here and not really show any movement and then start drifting off. What I don't want to see it do is open up here. On the other hand, if I'm buying something on a positive open, I don't want to see it open down here. That tells me the bulls aren't there. Now, that doesn't negate buying, because if it opens down here and then starts moving positive back up through the close of the doji, what color is this candle going to be? Oh, for crying out loud. Give me another green candle. What's that telling you? The bulls are still buying. So it might, if it opens here and starts trading positive, I'm buying pretty quick. If it opens here, it might take 45 minutes, an hour and a half for it to start coming back up before you get back in or you get in. Okay, and the other reason that we want to see which patterns are working is what's your high probability setup. So first of all, a J-hook pattern looks pretty good. Number one. Yes, that's right, I need a plumber. Number two, it's my bobble pattern. So if you were buying on this day because of the bobble breakout and it closed right back here on the T-line, what was your criteria the next day? It had to open positive and trade positive to stay in it. If it closed back below the 50, what did it tell you about this shooting star? Telling you they were resisting here at the 50, that the bobble breakout didn't occur. Now, just to observe the obvious, look what happened in the last few days on this bobble breakout. They were still trading positive when the market was selling off. Gecko, nothing yet. You had a morning star signal after the pullback. Again, this one moved, 2 to 17.5 in 2 days. So if you had bought it here or here or here, what would you have been doing with it when it was trading up here? There you go, Marshall. Thank you. You would have flipped to your 10-minute chart. Let me see if I can get back to that day. No, yet. Yet. Oh, show spots. That doesn't make any sense. That didn't do the right thing. What am I doing here? Okay. All the way back there. That's what's happening. Okay. Rain like a sieve. There we go. All right. So it was that day where it opened and just skyrocketed. Then you had your hanging man, and then you started seeing selling. Well, up here, you might have been taking your profit, knowing that it was coming back to the T-line. You could always buy back after that at some point. But that would have gotten you out at 16, 15.5, somewhere in there, instead of waiting for it to come back to the opening up down here before you were taking profits. You were getting out up here because Why would you be getting out up here? Very simple. Look how far away you are from the T line. And obviously, if a stock goes from 2 to 17.5, what do you think might eventually start happening? Somebody's going to start taking profits. We just want to use our 10-minute chart to show us when that's starting. That was on Yeko. All right. Okay. We also recommended shorting alarm based on if it was trading lower today. Then so what did we have? A wave 1, wave 2, going into wave 3. So if you were going to go short and it opened positive, it was a very easy place to go short. It came back down through the close of the previous day because which way do you think it was going at that time? It was heading down. Dan, that's up to you. I use the 10-minute chart as my bellwether. If I see things starting to get a little bit soggy or potential reversal on the 10-minute chart, I'll flip over to the 5-minute chart and get a little bit faster read. If I think the 5-minute chart is starting to confirm that the 10-minute chart is going to look bad, then I flip right down to my 1-minute chart and say, all right, what's the 1-minute chart telling me? If it's looking bad, that's telling me my 5-minute chart's going to look bad, which means my 10-minute chart's going to look bad. So you're just speeding up the visual analysis of what the buyers and sellers are doing. Forgot what I was doing. Oh, shorts. Okay. PayPal. This is, again, where we have the benefit of seeing exactly what's happening at important technical levels. Look where a bearish Harami occurred, right smack dab off the 50. Then we had a bullish Harami. What's that give us the potential of seeing? Maybe a bobble breakout. Here's one lesson that you always want to keep in mind. If you see a candle, and the next day they gap it down below the open of that candle, or the opposite, they gap it up above the open of that candle, that tells you there's a strong move in that direction. Vasu, wait till we get to the end. So right now we got a bearish Harami and a close below the T line. The Stochastic's rolling over. What would be the criteria for tomorrow? If it opens lower, you can start shorting it with the expectation that at least it's going to come back down, probably and test this level. Now, obviously, this is going to be predicated on which direction the market is heading. Intel. This is a perfect example, too, that if you're in an uptrend, as soon as you see it close below the T-line, close it out. Where is the bearish Harami? Oops. It's not quite a bearish Harami. It did actually close below this level. But it did give you a message. Told you they weren't going up through the 50. So you're right. Technically, that's not a bearish Harami. So if we back up a little bit, if you were long and you didn't close here, you held on to it here, and they gapped it down below the open, that was saying, all right, they aren't going in this direction. Close out the position. What would be the mechanics of setting up a bearish put spread? Would you wait until after the open and wait for the direction of the market? Yeah, tomorrow's, on any trade that you do tomorrow, is going to be a function of if we wake up and the pre-market futures are showing the market's going to open up 250 points, you probably don't want to be putting on a bearish spread on at that time. You can't do anything about that. All you're analyzing on any stock, if there's any manipulation, all you can see is what they're actually doing. I don't know whether that's hard to say. Right now, as it's already off 26%. That's a hefty percentage for any stock. Usually after 10%, you start looking for a bounce. Now what was I doing? Oh, GDS is one that we're short. Now there was a bullish Harami right here. So what was our criteria the next day? If it opened positive, close out the position. Worst case scenario would be it hit the 50 and headed lower. Well, they actually opened it lower. Then today they opened up positive. So you're probably getting ready to cover the short, or we were getting ready to cover the short. But there was one little indicator that was telling us, all right, let's just wait. Because when they hit the T line, they backed off. So it's not rocket science that if you already make it your criteria that you definitely need to see the confirmation of a bullish signal and a close above the T line. But if they're coming up to the T line and you see they can't get through, kind of don't pull the trigger just yet. And Electronic Arts is another one where you can see wave one, wave two, kind of a kicker type signal. Opened here, closed here, right at the T line. They gap it down below the open and go the opposite direction. Now the true kicker shouldn't have a tail to the upside here. But the fact that it has a little tail still below the T line and goes this direction still gives the same indication. There's strong selling, and that tells us exactly what's happening here at the T line, that we could be in a wave one, wave two, wave three. So the one that was most obvious on a kicker signal was not too long ago on F5, where we had the kicker signal to the downside, didn't support here based upon that candle. So where was your next likely target? Where did your bullish Doji Harami occur? Right after it hits the 200-day moving average. All right, so if we're getting ready for tomorrow's trading, and we've got stocks that have just gotten slammed, these are the, and I think and this one wasn't, but the percentage move was pretty hefty. This is the ones where you can watch to see how they open it. If they gap it down, start watching for the buying to come in. If they open it positive, start watching to see if they don't bounce it back up. So, because the reason they would bounce it is when you get excessive selling, what do you think's going on in that excessive selling? People are either getting margin calls or they're just saying, get me out of this, and they're where the stock may have closed right here, all the panic selling was driving it down, which means people that are rational might be buying it, taking it right back up to where it should have been, so you get a quick pop. Now, you could also scan for the stocks that had big volume today. Well, why is that doing that? Well, ACB was one of them. Now, shucks, let me see what's that happening in all of them? Nah. Here's another one. And this is where analyzing your charts becomes much more, people say, well, you can, oh, everything looks better when you look at it from hindsight. Yes, but if you know your hindsight is you're in a downtrend and you're having a bearish signal right here at the 50, where's your next likely target if you're in a downtrend? Right back down here to the 200. In this case, we can see they didn't support at the 200. When they bring it back up to the 200 to see if it's going to act as support or resistance, what do we get? There's our bearish Harami. And selling, what does that tell us about the 200? We're now wave 1, wave 2, wave 3. Now, I found this one based upon the big percent move to the downside and excessive volume today. So when you see that excessive volume, a lot of people ask, well, do you use volume for your decision making? Normally not. But if you start seeing people panic selling, the volume's going to get bigger. So this is the type where you can go in and see an opportunity, whether they gap it down. The reason you'd like to see them gap it down is when they gap down in an oversold condition. What do we know about a gap down in the oversold condition? That's where you start watching for your buy signals. Let's try this one more. Oh, that's because they just moved over. All right. This chart hasn't updated it. This one, Briggs and Stratton. Where do you think the panic selling is coming in? How far down they've moved? They're down 7 points from the high. They're down 50%. Is that right? With big volume after a gap down, that's where you start watching for your buy signals down here. So if the market, you see the market opening up or selling, I mean, if we're looking for something that's going to have a big percent move, if the market's trading down another 400 points tomorrow morning and this gaps down and trades lower, this is the type of excessive move that you want to start getting ready to watch to see if there's going to be a reversal. AOS also had big volume in the oversold area. So this is the type that could be breaking down to where they start crashing it. That's where you start stepping in and make some very good money. And when I say very good money, through the years, when you start seeing the panic selling at the bottom of a downtrend, there's times where you can be buying here, and by the end of the day, it's up here, and you've made 30% on your money. Got to remember, most people are happier than a pig in doo-doo to make 10% return on their money annually. So if you could identify where the reversals are, that you can pick up a 10, 20, 30, 40% return, AOS has been up 100%. Okay, that's good seasonality information. DKI. Another one. Panic selling. Start watching for possible bounce. And remember, once these panic selling situations occur and they're drastically oversold and we can identify a reversal. Let's say, for example, they gap it down here, traded down, and it comes back up through the open. What's that tell us? It tells us even though it's down 3 points on the day, that now buying is occurring. And what happens when you're drastically in an oversold condition and you start seeing the buying? Everybody that got out of it is going to start rushing back in, and that's where you get some very big moves. And CL, is it 910? Holy smokes. I didn't have very many. I must talk like a blue streak or something. CLR, same thing. Huge percent sell off. Start watching for a buy signal. Oops. Oh, for sure. I don't know. That's just great. OII maybe. Oh, there it is. Another one selling off. And again, notice the warning. How far away you've moved from the T line. All right, Steve, that's the information that, you want to kind of convey to the chat room. Everybody that has different technical indicators or using somebody else's analysis, if they've got something that's going to add to the all right, that's delisted, okay. Adds to the probabilities. Don't be afraid to throw it into the chat room. And CGC, another lead stock that's getting hit pretty bad. Okay, that's about all I got tonight. So what we're looking for is how this market, I'm going to just take a quick check here. Right now, the aftermarket futures are down, up 59 points. So with that might be telling us they're opening this up and doing a bullish harami down here about wave 1, wave 3. Okay, any general questions on candlesticks? All right, Jim, go ahead and do the double line. And then 4.1 seconds, do the next double line. EEFI, that's not coming up. That's coming right out of the chute. Did I do that wrong? MLNX. Yeah, that's that one I would have closed out today. With the gap up and it closing below the open, I would have closed it out. I wouldn't take it off the screen. I'd be ready to buy it back on the next buying. But for all we know right now, they could be bringing it back down, test that area, the moving average. MDB, Mongo just on in life. You could be buying this one, especially if it opens, if it trades above today's open and tomorrow's trading. GNC, nothing here. If you'd been short, well, you couldn't have been short but really nothing yet until they can get this back up above the T line. Vitamin Shop, same scenario. And now in this one, if you'd been short, I would have been more apt to be covering the short today. You still have the possibility of it going down to the 200, but I would have covered the short today with the markets that week eventually. I would have been out of it. Easty, you can stay long on this one, provided the volume is good. That's decent as long as it stays above the T line. AK Steel, another one that I don't know if I don't think you could be shorted, so I wouldn't be long or short this one, obviously. Definitely not long. American, nothing of any great consequence yet. And that's still because of the pressure of the market. And Costco, another one that if you'd been short, I would have been ready to cover the short with it trading back up. If it opens positive tomorrow, I'd cover a short position. This is pretty much telling you this is now acting as a support level. Athens, that's a Morningstar signal. If you bought it on positive trading today, stay long, but don't let this close back below the T-line. And EXAS, if you had bought this one today, you should have closed it back out, and I wouldn't be long or short. No direction right now. Which I'm afraid is going to be quite a few, is until you see something that's telling you the market has stopped its downtrend, you definitely don't want to be going short. But even this one, if you've been short and should have covered it today, wouldn't be going long, but at this point I'd be out of it. ESS, yes, you can stay short on this one. INSEE. Wouldn't be long or short this one, no direction. 3D, stay short, yes. PRVG. That's not too tough. It has to open positive to stay in it. If it opens lower, you're pretty much right here with a shooting star doji. They're probably going to be bringing it back down to the 200. Microsoft. If you're short, stay short. It still has the prospects of coming down here to the 200-day moving average. And this one, if you went long today, it has to open positive and trade positive. It needs something bullish to tell you they're going to move you up away from the 50-day moving average. Salesforce, stay short, as long as it stays below the T-line. Grub, stay short. You're in the oversold area, so your safety stop is just above today's open. Procter & Gamble, running out of steam, which unfortunately for Procter & Gamble, when it runs out of steam, that means it's not going to move anywhere. If you're long and you like it, you stay long as it stays above the T-line. You're just not going to make a very huge percentage return off of it. FedEx, stay short. First Data, stay short. I would use today's open as your stop. Gulp, this one you can be buying. That's a nice little fry pan bottom breakout. Look for a 45 degree off of here. NIHD, I would stay long because of your the fry pan bottom setup, with this being your dimple area. So if this is the first half, the second half is just about ready to kick in. EEFT. If you're short, stay short, but just watch now to see what happens here at the 50. Visa. I'd stay short, but also watch to see what happens here at the 200. All right, thank you, Steve. That's good. What they call seasonality information. Okay, everybody. Markets still getting slammed. I don't know if there's a Fibonacci. Boy, that's way past the Fibonacci 60%. Even if you use this level, yeah, if it's way past those, so your suspicion needs to be possibility of approximately that level. Well, almost touched that level today. Might be close enough to say be bullish. Yeah, still positive 52 at this point. I'll try to come in early, yes. You modify your trading when a bear market is called? No. I wasn't as heavily short as normal, but I had a few good short positions. I mean, I've made some big profits, especially in the puts. Made big profits on this one. There was a couple other ones, but still have some puts on NVIDIA. I covered some of it the other day. I forget where it was. I think I covered some as it came back up through this level. When do you place fib on from the top or the bottom up? If you're looking at the pullback, you're starting from the bottom, putting it at the top to see how far the pullback is going to be. Now, if it's the other way, if you're in a downtrend, you think it's going to pop up, you start from up here, go down here, and then you see what different levels it might pop up to. Okay, everybody. You will see everybody bright and early. I'll get in before the market opens, and we'll see what the pre-market futures are doing. Have a good evening. We'll see you in the morning.